the US is by far the leader in defense tech at a sort of large scale. So our view is the opportunity set is still out there, and that's where our clients are looking to invest.
Hello and welcome to this week's episode of the PWM Tea Break with me, Yuri Bender, and my special guest, Rob Poole, Chief Commercial Officer at London-based investment firm W1M. It's great to see you again, Rob.
Thank you very much for having me, Yuri.
And which type of beverage have you chosen today?
I have gone for the very simple black Americano to keep me going, because I feel I might need energy for this chat, Yuri.
I've gone for the healthy option, the green tea, because I think I need to keep on my toes. And I did quite an interesting interview with Nancy Curtin, the Chief Investment Officer of the family wealth firm Tiedemann Global. She was quite positive about Donald Trump's influence on the global markets. She talked about his natural style, his transactional nature, and his instinct to smell a deal. He's on his latest state visit to London and Windsor Castle, but you are seeing a very different dynamic, Rob. I hear some of your colleagues talk about the Donald Dashers in the UK with an opposing view to the one Nancy has about President Trump's economic policies. What is the thinking of this cohort?
We've had the benefit of dealing with American families for a long time, Yuri, and as part of that, we've seen lots of different cycles of administrations come in. And I think the first thing to remember is the common denominator is that every 4 years, given the relatively polarizing nature of politics, you have a different cohort of people who are currently not that happy with the current administration. For the first time, you're getting this cohort of family looking outside of America and saying, hey, perhaps we should look at country diversification. So that's been the biggest shift this time, and we've seen not an insurmountable amount of that happening.
And we have people in the UK, families unhappy with the non-dom changes, of the lack of investment in infrastructure, a host of other things. And some of them apparently are looking for the La Dolce Vita in Italy and elsewhere, according to Claire Pooley, who wrote an interesting piece for us.
This is not a new trend. I would say it has been exacerbated by what's happened in the UK and the US. And we most certainly feel that some of our clients have come to the conclusion they are not being supported. The UK is not the best place for them to further their careers or their wealth. And so are looking at abroad, Europe, the Middle East, and ironically, America, based on what we just said a minute ago.
There's problems and issues everywhere, and the UK, where we had 150,000 protesters on the street the other day in loose support of Nigel Farage. Asia, there's a lot of protests going on right across the continent. In France, of course, the government has collapsed, a fiscal crisis. What do those issues of a potential crisis of confidence on this continent mean for your investors in European stocks and bonds? Are they still invested in those portfolios, or are they looking much broader?
We still see opportunity from a bottom-up stock selection perspective in European companies, regardless of all the geopolitics and the challenges that you're talking about. Given the conversations we've had about movement of clients, Americans moving out of the US or investing outside of the US to the UK and Europe, there is also a growing demand for European assets and European-denominated investment portfolios. So clearly, it tends to be client objective-driven. If a family is moving to Europe, their centre of spend and cost is euros, and therefore, covering that with an investment portfolio is key. But Europe, has maintained part of our investment thesis, and we have a very, very strong European equity growth fund that people are getting much more traction into.
Rob, we can't forget that there's a major conflict going on, military conflict at the centre of this continent, and I'm just back from the war zone in Ukraine, and very much a hybrid existence there. And everybody's going about their daily life. and then suddenly there's a load of sirens, which I heard on several occasions there, and people think at any moment something can come from the skies in a Russian attack. They don't know when that's going to come. But to counterbalance that, there's this huge startup community there who are innovating, coming up with anti-drone technology of all sorts of protections, all sorts of devices. When it comes to this defense tech, because these guys are very much looking for family offices to invest in those. Are any of your clients interested in this defense technology?
The way we look at it is defense spending, defense technology is clearly a hot topic that people want to talk about at the moment. We have within our European portfolio, equity portfolio, a couple of defense securities that are benefiting from the rhetoric around increased spend on defense. Our view is that still, if you look at the opportunity set in that, the US is by far the leader in defense tech at a sort of large scale. So our view is the opportunity set is still out there, and that's where our clients are looking to invest, notwithstanding the point you make about numerous startups that are, unfortunately, I suppose, coming off the ground as a result of domestic challenges.
And of course, when we talk about these markets and the uncertainty there, we tend to use a lot of metaphors, the likes of the herd mentality and the animal spirits. I know that you have a whole menagerie of animals in the deepest countryside in Hampshire, and we had quite a nice piece by a gentleman from Aubrey Capital Management, Tom Dalrymple, investing in pet projects. We've got all this unpleasant stuff going on with the wars, the tariff tantrums. Do you think this kind of more interesting, pleasant home of investing in pets and animals, is that something that can capture the minds of your investors?
Yeah, I think we've all read the various stats since lockdown about the amount of animal ownership. I would, to your point, my personal experience is that you don't buy pets, you do invest in pets, Yuri, because, I think it would have been cheaper to invest in the veterinary clinics myself than continually pay the numerous bills I seem to be doing on a regular basis. The return hasn't been great financially. If we look back 4 or 5 years, ironically, the veterinary world went through its own private equity expansion and consolidation. And actually, we have a number of clients who ultimately sold their businesses through that. There's certainly money and interest in the infrastructure around this clearly increased interest in the UK population's view on pets. I have 9 chickens, Yuri. Do I take them all to a vet on a regular basis? No, I don't. But 9 chickens, 2 dogs, and we look after a pony. So there is money to be made in pets, that's for sure.
So definitely laying some golden eggs for our investments there, Rob. And sadly, that's all we have time for. I'd like to thank Rob Paul for joining us today, and I look forward to seeing you all soon for more episodes of the PWM Tea Break.